g'day there traders and friends, market participants and enthusiasts right around the world. Thanks a lot for joining me on this Tuesday afternoon market recap. A lot happening with the US financial markets. Yesterday, the markets rallied 400 points. Today, we saw them close down 300. So the net movement over the past two sessions is only 100 points to the upside. What has taken me by surprise is that the markets actually continued, or at least started the week, relatively healthy. I didn't have any skin in the game, so to speak, and nor did anyone who listened to me over the weekend. What is good to know is that we've avoided this little bit of mayhem, what appears to be that of a reversal taking place as at the close on Tuesday. You can see for yourself on the Dow Jones Industrial Average, what we have established right now, as at the close on Tuesday, is that of a tweezer top reversal pattern. And yes, we did overshoot that 61.8 Fibonacci retracement level, measured off from the beginning of the sell-off, dating back to the late stage of January, right through to this specific candlestick here on the 9th. You can see this measurement up into this red rectangular box. We overshot it as at the close on Monday, but it looks as though finally this level, this 61.8 retracement, is going to hold true. It's a little bit unclear if we are going to see that terminal reversal head on back down to this lower area, but the good news is that we are not long in this market at the moment. Now is not the time to be taking any bullish trades. You can see in our top 12 individual trade list as I cycle through this, just the amount of risk that we have avoided, and I'm hopefully making a lot of sense, of course, to you out there if you are following along with these YouTube updates. What we've established today is that of a series of upper wicks. Now, again, this is what we call a tweezer top reversal. It is a reversal signal, so expect selling to continue Wednesday through Friday. It may not necessarily begin first thing tomorrow in tomorrow's session, but we should see again these markets come on back down. We might see a little bit of temporary support as at the difference between the close last Friday and the open on Monday. Yes, we do have that of a little open window, so pay attention to this pivot. It is only a couple of 100 points below where we closed today. If we can crack below this level, then this 24,740 bearish trigger that I've been speaking about for a number of weeks is really going to really look quite enticing if we are to see sellers move this back down to 23,859. Now, if I continue with the S&P 500, you can see for yourself that we do not have a tweezer top reversal. This is what we call an engulfing outside daily candlestick. It is the strongest of bearish reversals. It is stronger than what we did set up on the Dow Jones Industrial Average. Pay attention if you are long on the SPYs. It's a good idea to liquidate any positions that you may have. It is a little bit foolish, of course, given the amount of warnings that we have had set up over the past week or so of trade. We've got a plethora of shooting star candlesticks, high wave spinning tops, again, hangman candlesticks at resistance. That's why this little bounce took me off guard Friday and Monday. It was a little bit frustrating to sit through, but again, it looks as though the natural ebbs and flows of the market are going to make their way, or at least work their way through the system, and we are probably going to see lower prices over the coming weeks. 2,686 is still a definitive entry on the SPYs. I'm very happy above all else that we're not long in this market, and that our disciplined approach to the markets has kept us out of placing a bunch of losing trades, which is what is most important and for you to get your head around at this particular point. Now, if I move into the NASDAQ, again, this is the third, different type of candle that we have seen develop on the daily time frame. It is very similar. Yes, we have gone through that of a tweezer top on the Dow and engulfing candlestick on the S&P 500. This is what we call the one black crow. Now, interestingly enough, this is the second strongest bearish reversal candlestick, the strongest being that on the S&P 500. Again, this is the engulfing candle. Now, if I go back into the NASDAQ, this is what we call the one black crow. So, again, the writing is on the wall. It looks as though the market is about to roll from these areas, or from these, relevant resistance areas. 7,425 is that resistance area on the NASDAQ. We did overshoot the 61.8% retracement. The NASDAQ was the strongest of the three markets, largely helped by, of course, some of these potential breakouts on Amazon and also Netflix, which really haven't materialized as at the close on Tuesday. Of course, Apple running back up into its also relevant resistance area, but all of these individual stocks looking to actually reverse, and it sets the tone, of course, for this market moving lower as we continue into the week and most likely into the month of March as well. So pay attention. 7,122 is the entry on the NASDAQ. We can scoot this up a little bit higher, actually, 7,185. I'm still confident, of course, in the bearish entry on the Dow Jones Industrial Average that I've spoken about, and also on the S&P 500. I'm not going to rejig this. I'm going to keep it at 2,686. Again, just to reiterate, a lot of volatility. Again, this leads to whipsaws if you are a swing trader. It's a different story if you are that of an intraday trader. That is not me. That is not what I do, and it's not what I speak about. And of course, all of this net movement, or at least all of this volatility that we're seeing continue to pick up in the markets, is really leading us into that of false breakouts, as you can see on my screen, that are most likely going to quickly reverse. And there is going to be a lot of opportunity on the short side, which is what I've been speaking about not only last week, but the week before as well. Now, if we continue into our individual top 12 individual trade lists, actually, before I get there, let me just show you what's happening with the US dollar. The US dollar strengthening today, up 56 cents. This is the US dollar index. I'm still looking for the US dollar to rally up into this red box. This is going to set up that next consecutive series of lower highs. It is going to actually stall somewhere below 94. And what this is going to do is set up that next buying opportunity on these commodity markets. So pay attention on GLD. My buy spot that I'm waiting out for is somewhere between 122 and 123. When we get down to this level, this is going to work in conjunction with those rising simple moving averages, both the 100 and the 200 simple moving averages. And once we find support at this, it's only a matter of time until we break out above this 130 resistance area. And what that is going to lead to is prices running up, at least for gold, up to 150. So there are going to be some really nice profits on those call option derivatives. It's just a matter of being patient. Now is not the time to be buying those call options. Wait until price breaks below, at the moment, that 50 exponential moving average. You can see we're sitting right on it. This is coming in at about 125, just above where we closed. So we actually closed below it as at the close on Tuesday. We might see a little bit of temporary sort of bounce, or at least holding around this support area just above 124.50. But once we crack this level, it should come on down to about 122, if not 123.50, somewhere in this green box. And then that's where we'll start pulling the trigger on a bunch of these call options. The same is true for silver. I'm not actually trading the silver chart. I'm going to be using the gold chart as my entry for silver. If you need to choose between silver or gold, personally, I go with gold just because of the way it's priced. It is a lot more beneficial for those option contracts relative to silver. Silver is denominated in a lot smaller sort of value, $15.49 versus about $130 for the gold ETF. So that's my personal preference. It may not be your preference, but again, the macro theme of this is that commodities are going to strengthen once, of course, the dollar peaks up and around that red rectangular box that I've already just spoken to you about. Now, if I move through the top 12 individual trade lists, really the narrative of what I've been speaking about is wait for these upper wicks to develop. Wait for that first series of at least dark candlesticks to show you where those resistance pivots are. And then, of course, you can change your bullish breakout triggers. Now, what we've seen collectively across the board are a bunch of upper wicks develop as at Tuesday. So if you pay attention to Apple, you can see this is what we call a shooting star right around this pivot dating back to January 2018. So again, I've been not looking to jump into any of these trades bullish. This is all about the pullback. And what you should see is a little bit of volatility, generally a sideways market move on these individual trades, and then we'll have some pretty decent bidirectional trade setups as we move into next week. The same is true for Amazon. Pay attention to this. We rallied about, yesterday, if I can move my chart over, you can see we rallied about $22. Today we pulled down $10, but again, a dark candlestick, which is really hammering into this resistance area. So I'm not in Amazon. All of these dotted entries are there for a reason. It means that, again, I'm not personally placing them in my own account. You can see the solid default line is my short position. I'm not changing any of these. What we're starting to see is that first sell side volume enter into the market. You can see as at the close, the volume isn't all that high, but I'm expecting this to actually pick up over the coming sessions. If I move into Boeing Airlines, pay attention to this. This is what we call a doji candlestick. It is very close to a gravestone doji. What's most important that you realize is this pronounced upper wick. This is our sell side volume, and this is what we call a false breakout. So you can, of course, see that you can determine these before they occur based on the market setting, the theme of the market itself. And if the market is acting a little bit undisciplined, just stay disciplined, and generally the market will hold true. And that's exactly what we're seeing as at the close on Tuesday. So a false breakout taking place in Boeing Airlines. We've been expecting that. I'm pretty happy to see that develop as at the close on Tuesday. Again, an upper wick on Baidu. Another little shooting star candlestick, or at least an inside day type of candle. 243.25 is still the bearish trade setup. We don't have an actual confirmation of that. We may see that over the coming couple of sessions. The 61.8% retracement, that fib retracement level still holding on Caterpillar. You can see we actually retested that for the first time on Monday. Today we got that definitive reaction down $2.43. No bearish trade on Caterpillar. The risk and reward profile is a little bit out of sync. So pay attention to this. Although we're not really looking for an aggressive trade setup on this, we should see lower prices than potentially that of a bounce trade. Now, COP and CVX are very similar to one another. Yes, we do have positions in these, but these are longer term positions. We should just have to sit through a little bit of market volatility, but we should see these both of these trades actually hold their respective resistance areas. 54 on COP, and the same is true for CVX. You can see we have a little shooting star candlestick. It is marginally profitable at the moment, but we should see this hold about 110, 108, and then of course we can begin nibbling on some more call contracts on this at lower prices. So this is just a little bit of a pyramid position until we see, of course, the legitimate buying pressure come into CVX, which is going to take us up into this red rectangular box. So there still is some pretty decent profits. We just need to simply sit on our hands for the time being. Google is also finding resistance. You can see another tweezer top candle. It's almost out of an outside day Morobozu. Again, both relatively bearish. We closed down just over $25 per share. This is after the shooting star that we saw on Wednesday last week. So you can see that all of the gains that have been made since Wednesday have largely been given back. I'm not looking to actually short Google. This is something that I'll be looking to sort of jump into in terms of the Qs if we start piercing below 7,185. I'm not looking to actually trade Google. If we move into Goldman Sachs, we're coming back up into this resistance area, the first little reversal candlestick after, again, this long doji type of candle, at least this shooting star candlestick over here. Down $3.33, but no real trade opportunity unless we start cracking 259.38. We'll see what happens as we move towards the end of this week. IBM, a little bit of a slowdown, not a whole lot to talk about in terms of IBM, but the same is true here for Netflix. Another individual candle which is presenting that of a false breakout, down $3.37. That first dark candlestick, a little bit of a wick, not the largest of wicks compared to, say, Boeing Airlines, but you can see the common theme amongst all of these individual trades and also the markets. They are looking to reverse. We'll see how this plays out Wednesday, Thursday, and Friday, but now is not the time to be going long on the market. In fact, you should be potentially weighing up opportunities for reversals in these market indices, but also individual trades as well. Tesla, to round out our top 12 list, down $6.43, but no major trade setup, not until we start cracking below 340 or even 331. Tesla's something that I've been paying attention to for a number of months. It looks as though we are putting in a macro top on this individual stock. We've got a lot of bearish divergence across the board, not only on the daily time frame, but also on the weekly time frame as well. Pay attention to this. This is going back to the midst of 2017. And if I go out to the monthly charts as well, we've got a series of sell signals across the board on the RSI and the stochastics too. So if we start cracking below roughly 315, we're going to see substantially lower prices on this stock. But at the moment, it's the early stages of what is that of a resistance area holding around 360. Okay, so if you have any questions, please email me. You know my email address. Until next time, everyone, be safe and enjoy your evening. It's James signing off on behalf of Pivot Point Trading. All the best. Goodbye.